Hello, welcome to European Open Briefing for Wednesday, July the 18th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. It is all about the US dollar this morning. The greenback got a major boost yesterday from Fed Chair Jerome Powell's testimony before Congress, where he painted a very upbeat picture of the US economy. We're seeing the dollar index back above the 95 level. Dollar yen has broken above the 113 level. US stocks also got a boost from Powell's remarks. We saw all major indices in the US closing higher than Nasdaq, reaching record highs. And in Asia, most bourses also closed higher, except in China, where we can see China's main indices gave up earlier gains. In Europe, though, we're seeing a strong positive open. But all of this has been negative for the gold prices. We're seeing gold currently trading near 1-year highs. The pound also is under pressure from the stronger US dollar, but in addition to that, political uncertainty in the UK is also weighing on sterling, which yesterday fell by nearly 1%. It's currently trading around 1.3080. The euro is also under pressure from the stronger dollar. It's been drifting lower towards the 1.16 handle, having earlier this week broken above the 1.17 level. And commodity-linked currencies, the Aussie, the Loonie, and the Kiwi, all of them gave up earlier gains from yesterday. Yesterday, the commodity-linked currencies had a positive start, but we're seeing all of them erase those gains, mainly being weighed by lower commodity prices, as well as, of course, the stronger US currency. And if we look at the major performers, we can see that the Loonie is the weakest currency this morning against the US dollar. The dollar index there we can see up by 0.3%. Oil prices are down sharply, and so are the Aussie and the Kiwi. Let's have a look now at the dollar yen pair. We can see it's broken about the 113 level for the first time since January. So Fed Chair Jerome Powell yesterday said that the Fed will probably continue raising interest rates gradually for now, and that he expects several years of strong jobs growth and low inflation, so the current picture to continue for several more years. And although he did talk a little bit about possible negative impact from trade tensions, he didn't seem too concerned about that for the time being, so that also helped market sentiment. All of this pushed 2-year treasury yields to 10-year highs, so that in turn lifted the US dollar, dollar yen at 6 months highs, and dollar index near 3-week highs. Turning to gold, now we can see the precious metal is approaching the 1,220 level. It's early hit a 1-year low, 1,221. Gold has been on a downtrend since April, mainly on the expectations that the Fed will continue to raise interest rates gradually over the next couple of years. And there's been not much support for the safe haven gold from rising trade tensions, as the stronger US dollar and higher US yields have been the main driver for gold prices. Let's turn our attention to sterling now. We can see those sharp falls yesterday. That decline came initially on reports that Theresa May will probably lose a key vote in Parliament regarding her customs partnership plan with the EU, but although she did manage to win that vote in the end, it didn't help sterling that much. She did lose one other vote, which wasn't as important. MPs said that the UK should continue remaining part of the European Medicines Agency after Brexit. That wasn't as important as the one regarding whether or not the UK should stay in a customs union in the event of a no-deal Brexit. Overall, although May is safe for now, it is getting tougher for her, so a lot of uncertainty ahead. And of course, she only won that vote yesterday by making concessions to pro-Brexit MPs, so that makes it now less likely that the EU will accept May's plans on a customs union because of all those amendments that were forced by Parliament. We can see sterling is close to that support level around 1.3050, which we can see from back at the end of June had helped sterling rebound higher. It's currently trading around 1.3087. It could get a bit of a lift later on from UK inflation data coming up, as well as retail sales numbers due tomorrow. The Bank of England will likely raise interest rates in August if those data continue to come on the upside. Surprise on the upside. Yesterday we had the UK job numbers, which came in line with expectations. And let's see what else is coming up later today. We've got the Eurozone final inflation figures coming up, as well as building permits, housing starts in the US, and oil inventories, as well as Fed chair's testimony this time before the House Financial Services Committee. That's it from me. Thank you very much for watching, and have a great day.